In late 2023, Berkshire Hathaway, led by Warren Buffett, further increased its stake in energy titan Chevron, acquiring an additional 16 million shares during Q4. With this addition, Chevron now represents approximately 5.4% of Berkshire Hathaway's investment portfolio, positioning it as the company's fifth largest holding. Notably, Chevron was among just 3 stocks that Buffett chose to augment his holdings in during the quarter. Let's delve deeper into the premier energy investment of the Oracle of Omaha. Welcome to Money and Investment, where your financial future starts today. Ever wondered why starting to invest when you're young is a game changer? Let's dive in. Investing in the stock market might seem daunting, but it's a powerful tool for building wealth. Why? It's all about time and compound interest. Starting young means more time for your investments to grow. Think of it like planting a tree. The earlier you plant, the longer it grows and the bigger it gets. Worried about risks? The earlier you start, the more time you have to recover and learn from market ups and downs. And if you're starting at 50, no worries. It's about choosing the right strategies suited to your stage in life. Profile of the company. Chevron functions as an energy corporation engaged in upstream and downstream activities. Its upstream operations encompass diverse acreages worldwide, yielding oil, natural gas, and natural gas liquids. In contrast, downstream activities primarily encompass Chevron's refinery and marketing endeavors, refining and distributing various products including gasoline, jet fuel, diesel, and fuel oil. Additionally, Chevron possesses midstream and marine shipping assets, alongside ventures in renewable fuels and chemicals. Opportunities and risks. In Chevron's upstream operations, oil prices significantly influence its financial performance, a common trend across oil exploration and production companies. Conversely, crack spreads, or refinery margins, drive results in its downstream operations. Chevron's control over these factors remains limited. Over the past few years, oil prices have largely ranged between $70 and $100, presently resting just below $80, given that most prime oil basins in the U.S. have break-evens of $60 lower for new wells. Prices above $70 generally benefit the industry. On the downstream front, Chevron has experienced historically high crack spreads in recent years. Although not at their peak, spreads presently surpass their historical average of approximately $10.50. With spring and summer futures indicating high $20, refiners are poised for another robust year. Chevron's ambitious growth initiatives include targeting a 10% production increase in the prolific Permian Basin this year. Benefiting from low break-evens, the Permian is a key focus area for Chevron, with substantial acreage holdings. Internationally, Chevron aims to escalate production in Kazakhstan through an expansion of its Tengiz Chevroil project, expecting the full gas pressure startup by the first half of 2025, with full impact anticipated by 2026. Upon finalizing the acquisition of Hess in June, Chevron's 30% stake in an offshore oil project in Guyana, operated by ExxonMobil, is poised to be a significant growth driver. The project boasts highly favorable economics, with break-even costs estimated at around $28 per barrel. Beyond oil prices and crack spreads, Chevron faces risks related to project delays and overruns, notably evident in its TCO project and Permian operations. Geopolitical tensions, particularly in Guyana amid territorial disputes with Venezuela, pose additional concerns post the Hess acquisition. Moreover, Chevron confronts the long-term risk associated with the ongoing energy transition towards greener sources. Although such a transition may span decades, energy majors like Chevron must adapt to evolving market dynamics and environmental considerations in the future. Valuation. Chevron's current trading multiple stands at approximately 5.7 times the 2024 EBITDA consensus of $53.39 billion and about 5.2 times the 2025 EBITDA consensus of $59.9 billion. Revenue is anticipated to increase by 4.9% this year. Historically, Chevron has maintained an EV/EBITDA multiple ranging between 6 and 9 times, valuing the company between 7 to 8 times. 2025 EBITDA places it in the range of 175 to 205. However, adjustments are necessary to incorporate the impact of its acquisition of Hess, with the deal adding approximately $8 billion in net debt to its enterprise value and introducing clauses of 313.5 million new shares, The fair value of the company is estimated to be within the specified range, considering a 7-8x multiple on 2025 EBITDA. Finally, Chevron has thrived in a robust refinery environment and favorable oil market conditions over the past few years, resulting in impressive performance and substantial cash flow generation. The acquisition of Hess and its prized Guyana asset is poised to further enhance the company's production capabilities and cash flow in the future. Last year, Chevron achieved a record cash return to shareholders amounting to $26.2 billion, comprising $11.3 billion in dividends and $14.9 billion in share repurchases, all amid record production levels. With a consistent track record of dividend increases spanning 7 years, Chevron offers an attractive 4.2% yield, signaling potential for continued dividend growth in the foreseeable future. While crack spreads may eventually revert to normal levels, geopolitical factors such as trade flow alterations due to sanctions associated with the Russia-Ukraine conflict, coupled with shipping disruptions in the Red Seas, could sustain elevated spreads for an extended period. These developments bode well for Chevron and its largest shareholder, Warren Buffett. Ready to start your investment journey? Explore our channel for more insights on making smart, informed investment choices. Remember, it's never too late or too early to start investing in your future. Join us at Money and Investment for more tips and tricks on building your wealth. Subscribe and turn on notifications so you don't miss out.